over a long period of time is experience, and that's what we accelerate here by a massive degree. Now, as you can see, look, you know, I'm not feeling top form today. I don't actually know what's wrong with me. You can see my skin here. The window to the soul, the true window to the soul, I suppose, or to the immune system, is the skin. Look at that. That's not good, right? It's not good. So, that being said, we're going to take it somewhat easier today. If you want to take a look at stock and all that, you blooming well better get your request in, because who knows? And we are here. Good morning, everybody. I hope that I am actually streaming live. I think I am. Hit that like button. That really is appreciated. I'm going to do some squats just now, even though I really don't feel up for it. And then we're going to take a look at some charts together. The things that we're going to take a look at on the charts are going to be great. Look at that. I've got a stream on the go. That's the wrong tab, isn't it? This, right? Big stuff here, everybody. Now, you get 60% off and a free month on the Black Friday sale. So, TradingView is the best thing in the world for technical analysis. It's you don't get better. I highly recommend it. I use it literally every day. I've used it literally every day for a number of years now, and I use the mobile app every day. It's not like I'm trying to sell anything here. This is just something that I do all the time. So I put a link in there for TradingView, because really, if you're not using it, then there's something wrong with you. And if you're not using it and you choose to not buy it during that period of time, then there's two things wrong with you. Okay. And that's as simple as that. I'm not going to sell it hard. I'm not going to do any of that. I'm going to do some squats though. Really, look, if you choose not to sign up to TradingView during this week, there's something wrong with you, and I don't know what that is. Right, and if you expect to be able to communicate with me effectively, you know, after that, and I know that you have chosen not to do this, then I'll be sat there thinking, what's wrong with this person, right? So, I mean, if you can explain it to me, then that's cool. Otherwise, I'll have that going on in my head the entire time. Like, what's wrong with this person? No, not, you know, right? So, I'm going to do some squats. Oh, I'm not visible. The reason you do squats is because it's hard for me to do squats. It's hard for you to learn technical analysis. The meeting is halfway. I'm trying to improve my life, as you are trying to improve yours. So let's just get it done. It'll be done within 1 minute. Done. Right. Get the chat open. Okay. Squat cam eventually will arrive. Will. Maybe I got infected with something when I went out for that massage. Infected. Might have done. Right. Okay. Good morning, everyone. Got to get rid of that ad off my screen now. Do it. Links in the chat. Pinned at the top. Take the free trial. See how you like it. Use it for a week or whatever. Take the offer before it runs out. 4 days or whatever. Right. I think we've got Cyber Monday offers as well, but I don't know if they're different or the same thing or whatever. That's Evergrande. It went down to 250. Oh, did it go down to here? Just double check. Oops. With that wick there, why did it go down to 257? I said when it was at 280 to wait till it went to 255 to buy it. I honestly don't know if it'll go to 255 or if it'll, or 257 was enough for it or not. Honestly, I don't know. Right. GME, think it probably opened up a bit today. Yes, it did. 241, 2 for 1. Excellent 2 for 1. Such a great buy price, isn't it? 2 for 1. Whenever you get stuff at 2 for 1. Well, I mean, it is a great buy price if it goes up to 482 anyway. That's the way I generally look at it. Nice, powerful rise up this morning. Got a gap on here. That's okay. Got a gap because it was people did volume. Nice. Oh yeah, where's my volume? There it is. Nice. Sure it is. Sure it is. Sure it is. It would expect it to be decent with a rise up like that. Is it decent compared to the previous volume candles? Are the volumes, let's just look, you know, this is the rise up that's happened so far today. This is the rise up that happened at the end of trading on Friday. That's the volume from the end of trading on Friday. That's the volume from the opening period on Friday. So volume candle happened on the opening period on Friday. This is the volume candle. This is the price candle that happened on that trade time. Right. So there we have it. The volume actually isn't all that impressive, to be perfectly honest with you, given the size of this movement. But it's good. It's good that it's there because we can see, you know, 15-minute candles. That's a nice big 15-minute candle. Question really is, do we actually get follow through on that after the market open? It's been 11 minutes since the market's opened up. Nice big candle up the way. We've seen this story 1,000 times though. It's actually not about this. It's about what happens in the next minute, in the next 15 minutes. Hey guys, Jamie go mini burr. Indeed it does. Wolfie, good to see you. I need a 482. Let's go. When are we going, Rocky? Where are we going? Where are we going? Aye, where are we going? Where are we going? A little bit of a pullback just so far here. I'd be, you know, knowing that. Let's just see AMC. Woo! 42.81. 42.81. Well, how far is this? How far is it? Up to the 618. Right in there at the minute. You know, if things were to finish off there, in this 15 minutes and then move down the way, or even just move down the way before, that'd be totally normal. Humanigen. I think that's maybe moved this morning. Let me just see. Humanigen. Humanigen. Woomph. Yep. So that's what that one's done. Alright, that's what it's done. Whoop. Right back down to where it came from. This time around, same story as last time. So can we see things turn around in this one? Yes, we can. What would happen? Well, maybe they'd go back up and test off this area again. This story here in Humanigen, really stupid that looks now in retrospect, and how arrogant he was when he said it as well to the person on Twitter that we were talking about this. You know, it just goes to show you that, well, you know, you shouldn't listen to anybody. Here's something that's cool. RSRUSDT. Yeah, I am going to the 2-minute time frame. Yeah, I am. Yeah. Next target 37.5. What was our previous targets? Remember this over the weekend? Where was it? Did it? Doesn't matter if you didn't see it. I had some real good calls over the weekend, Thur. So it did. Anyway, this one's been decent. What are we talking about there? Is it me or does Rocky keep freezing? I look like I'm. Am I freezing? Am I? Yeah, no, it's not you. It's me. YouTube is not receiving enough video to maintain smooth streaming. So that's just how it is. Is if you go back a couple of minutes, I think maybe you'll get smooth action. Because I think it does get out there. You just might need to go back a minute to give it time to kind of buffer. I'm not 100% sure. Kind B. Oh, that's so kind of you. Hi, Rocky. It's been a while since I had some money to donate. That's really nice of you. Please know that everything you do and your efforts are really appreciated. Please take care of yourself and be well. Thank you so much. It's really appreciated. It's really, really kind of you. I know my efforts are appreciated. They really, truly are. I mean, I get days like obviously like on Friday, my donations were in terms of super chats and whatever. I did get tips in that through PayPal or somebody tried to send me crypto, but it didn't work out. Later on, they sent me crypto. It was all great. I mean, it's not like that. I got like £7 in super chat donations, and that's cool. But it's like I'm here because I know people appreciate me. I'm here because I know people appreciate me. I really truly do, and it's really amazing that you remind me. I would hate it if people stopped telling me they appreciated me. That'd be awful. So I really do. It's not like and then you do the donation there. It's really appreciated. Massively is. Like it's already more super chat than I got on Friday or whatever. So it's like it really is genuinely massively appreciated. I'm here because I appreciate all of you as well. Anyway, though, you are going to have to let me know what you want to look at today, right? Because I've done the squats. That was more energy output than I intended on doing. And from that point onwards now, it's your show, guys and girls. It's your show. Let me know what you'd like to take a look at. I'm going to try and keep the education light on the show over the next wee while. Stream is good for me too. Thank you for letting me know. That's awesome. Right. Dear Tesla, I love you, says Observe Thyself. Okay. There we go. Roses are red. Violets are blue. Tesla came back up to see in terms of the interaction around those zones on other time frames. Boom, doom. On other time frames. I know that's a lot. It's a highly traded stock as well. LRC? Yeah, let's take a look at LRC. Dear Bananas, I love you, says Banana Fridge. Ha! I want to peel you all over. And peel you again. Right, we have the flashes there have shown us the support and resistance zones so clearly that it's a joke, almost a joke, right? It's almost a joke. Well, we've come up to one. Very good. Where have we come up to here on this one here? Look at that. Ciao. Amazing. Amazing. Yes, it is. I want to touch all over. Right, yeah. So, do I think this is going on to all-time highs and all the rest of it right now, and this diminishing volume with those flashes having been filled in with the with this come up to oversold territory? Well, maybe hold on. Bum 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 bum. Doesn't seem that strong, does it? Really? Doesn't seem that strong now. Are we wanting this to be hidden bullish? I hope that noise isn't coming through. It will be, That noise that's outside at the minute is they've got this machine. It looks like a digger or whatever, like you got a guy in a little box. It's got an arm that comes up from the front, goes down again. Right. But on the front of the digger thing, instead of it being a digger, it's a big knitting needle, a big metal needle, massive needle spike, a big spike, and it goes down, goes va 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 va, and it smashes up all the tar macadam and the cobbles and whatever else that's on the ground, so that the next ones can come along and scoop up the first layer of road. That's what machine is outside. For machine lovers out there who needed that explanation about what machine it is. Rocky Aircraft, would you have a peek at Naked? Aye, sure. Yeah, look, Tesla, lovely jubbly. Would I take profit? Yes, I would. Bullish divergence here on the 30-minute time frame between the last two peaks? Sure there is. Yes, there is indeed. It looks decent enough. The 1 hour time frame here, same story. 4 hour time frame amortizes those last two highs into the one move. Really, we're just coming up here and looking, you know, not that strong really overall, but there's plenty of room to go. If we had to do a retrace down the way here to fill in this gap and to just kind of start to get that organic movement towards the top side, that would be it is. We've just had a crossover on the DMI, you know, in the previous trading sessions morning, so you know that's all right. But still looking down on the bigger picture, really on Tesla, back down to 448 at some point. Can it happen? So it's so painful, but you know, there's a few big rock breaker out there in the streets. A rock breaker, that's a good name for it. Do I think that this can continue? Yes, I do. I do think it can. I think that these big flashes you see in the charts can effectively stay there for forever, effectively. In terms of how you're thinking about things, that can happen. So if I go back to Bitcoin and try and see if I can find recent, okay, so that's the 2-day time frame. Sorry, 24-hour time frame. Yeah, so there you go. There's Bitcoin's one. It's down there at 7,125. So, you know, these are like the broad term bearish targets. Do I think that will be the low of the next bear market? Yeah. So that would be 90% dropping off in its price if it did it from now. Rocky out top. That's how they do the road knitting. Aye, that's it. Weaving the road together. Get its nice blanketed tarmacadam out there. That's how they do the knitting. It is. It is. Don't say that it isn't when we know that it is. Tesla, lovely Tesla. What did somebody say? Can we take a look at LRC USDT? Was it LRC's done okay over the last couple of days? Better than some cryptocurrencies. Actually, no. You know what? Cryptocurrency had a kind of shitty Friday, I think, and then a decent enough Saturday, Sunday. Yeah, whatever. I wanna kiss you all over and over again. Why am I singing that song? Well, it's because this pitchfork is just so gosh darn sexy. Oh, you just had to come right here into this tiny little zone. If there was a little zone, we could have identified it where that prices could have turned around at. That's nice. 284 is where that went up to. Where is it back down to? 260 at the minute, 259. So, I mean, looking at that picture there, are you bullish? Are you massively bullish on this thing? Let me just show you as well, by the way, so you don't forget. So you don't forget that Jamie and I were talking about this and saying, brilliant, wonderful stuff, great, can keep going, yada yada, totally could, totally did, bull flags all the way. And then to watch out, because it's dangerous. And you can get big moves like that there, which is a 30% drop off in price from that high to that low, 27, 30%, whatever. And to watch out, right? Because then after when they see this here, this high, which didn't take out that previous high, right? When you see this high here, this one here that came in on the 11th November, didn't take out that high from the 10th November, and then dropped back down again. That wasn't good. That was not good. And that's why this was dangerous for a lot of people. And obviously then resulted in a lot of people who bought this thing, well, above 250 essentially at the current percent discount on their... I crashed. What happened there? Well, they could have got a 40% discount on their LRC, but they didn't. And that's what I was trying to point out. A wee kind of touch of that, like, you know, if we don't go in 15 or something like that, because that's where the gap fill's coming in at, whatever the gap fill is, rather than going for that extra $30, you know, that extra, like, whatever penny percentages that it's moving. So LRC, what could it do? What could it do? Big drop back down since then. 26 is at the 236 in here. I'll just reposition this slightly now. Given where we come from. The low, obviously, wrong. You know, it was a nice looking Fibonacci. It was a nice looking Fibonacci, but it's not accurate. So I'm moving it to make it accurate, right? Even though this body lining up at 382 there is nice looking, it's not correct. So there you have it, correct instead. And the and now we've got the body lining up quite nicely with the 50% line instead. Ooh. Could we drop down to the 618 where we find the median line of the pitchfork, where we find the 50 simple period moving average and the 1 hour time frame? Can we get better than that in a sense? Like in a sense, like, is there broader term time frame targets that are there from what I already have on the chart and I don't see it? What's going on here? What have you done to my chart? That pitchfork is not loaded up properly. Yeah, whatever. So yeah, am I positive on this one at the minute? I haven't seen what I've seen so far. No. I'd rather have discounts down there. I'd rather get a discount if I was to be buying this closer to that. What's going on here? Why is this not lining up properly anymore? Why is this not lining up? What's happened? Right, yeah. Anyway, we could easily get a little bit more of a discount on this one. Buying it from right here, right now. Yeah, if you were scalping this in the tiny time frames, yeah, you could try to. Your risk would be quite high. I have to say, it'd be quite high. It would be quite high risk. You could try to though. Good morning. What a great day to not be at the office. Well, congratulations, bait buckets. Hope your bait's going well though. Hey, yay, just in time for some LRC. I'll be listening while I work. Happy Monday, everyone. Isn't that what Mary Poppins says? Listen while you work. Do, 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 do. Listen while Mary Poppins. Good to see you, Apple. Don't forget to like. Yes, please. Everybody that's watching, do hit like. Anyone else getting buffering? Yeah, buffering happening. If you go back 2 minutes, you might, not have buffering. Then you'll not be live anymore. Oh my god, then you'll miss out on all of that from 1 or 2 seconds. But then of course you will get live because the buffering will catch you up to live soon, and then it'll buffer again. It'll be great. It'll be great. You'll love it. Can you please look at Sophie? Says Hazaya can. Yes, I can. Yes, I can. But you're not allowed to talk anymore for 5 minutes because you said that in capitals. So I'm going to look at Sophie. Oh, it's done shit. Oh dear. Wick up here. Be taking out that 50 simple moving average on that time frame. That wick coming in just here. I think we can go a little bit further beyond that and try up to 2071. Current price is 1958. Yes. This has been shocking movement down the way. Will we be able to pull ourselves back out of this? Well, if we draw in a Fibonacci from here to here, he was motivated to talk in that direction. I'm just also because I'm so handsome. There's a guy with a hat on. He's standing on a diving board. It's all a bit high. Damn it. Damn it. There we go. Can we get up there? Can we get up there? Well, managing your risk on this one's fairly easy. If you take out 1948, say you go back into the Second World War, right? So you're happy to be here even though rationing still continued for some years past the end of the Second World War. So 1951, 1955, all that good stuff, you're happy to be around there. You're looking forward to buying your very own Andy Warhol print. But down here, if you retrace back down and go back into those blitzkrieg days of having a hideout inside the London Underground, then not so great. You don't want to be traveling back in time. So if we are in the post-war unification, unification stage of reunification, was there that? Aye, there was. Let's all start brainwashing the people the same way or whatever stage. Yeah, okay. And all that, but if we have to go back into the Pacific and all that and everything, I wouldn't want to, So here we are just challenging this at 1949, 1950. But can we find this as being our support and move on up for this one? Just now, can we? Well, we could, right? But this is one of those trades. It's like this is the trade you'd be taking off the back of this. We'd be looking for a lovely V-shaped recovery today on that one. Not a million miles away from the shite that you're seeing over here at GME. Which has dropped back down from where it was when we were looking at it at the start of the show to, you know, drop back down as low as 231 from having been as high as 243. With that volume that came in at the start of the day was good and everything, but we needed to see that continue on the way if we were looking for a day that would just roar towards the top side. Well, over here on Sophie, the goddess of wisdom, then you can have this move up the way, but just be aware, right, that there is a lot of this thing that happens out there in the world where people will try and tell you lies and manipulate you through telling you things that sounds like the truth. It happens constantly all the time. In fact, some people do it without even realizing it. I mean, just think about it. But you also have words like sophistry, which is a word which you've probably experienced. It's your day-to-day life, politics, for example. So just look out for that when you're dealing with Sophie, okay? It's always the way it is with Sophies out there in the world. Sophies themselves grow up knowing that they're named after the goddess of wisdom. I mean, it's not exactly a new flirt if you meet one at a bar or whatever. You just need to make sure that she's not lying to you is basically the deal there with that one, because that's exactly how it goes. Is that great? I'm a bit of a sophist, says Crack Croc. What? No bang make brain work good. Indeed. KT of Charka, I agree and appreciate your support, says Apple Blossom. How lovely. I agree and I appreciate your support. That's what I should say to people. Rocky, you're a legend. I agree and I appreciate your support. Sorry, I got an extra shot in my latte. I see. You're talking about crack. I get it. Coffee crack. Oh, I shouldn't say that because YouTube probably doesn't like it. Whatever. Anyway, there you have it, mate. I'm not going to waste any more time on this one. If it keeps going down, it keeps going down, right? Have you got your brown trousers out? Because you want to have your brown trousers out. Where are you going to look for them at? At the edge of that pitchfork there. Is that a pitchfork? It probably is. I don't know what it is, right? I don't know what it is. Don't know what it is. Going to just zoom out and have a look at it. Oh, look, it's a pitchfork. Oh, look, this is exactly matching the prices as well. You know, I'm pretty good at drawing in a pitchfork. This is new. I mean, I did this last on Thursday or Friday, right? Probably, right? Probably, almost certainly that's when I did it. But there you have it, you know. So we're down below that line. We're testing off of the moving average here in the daily time frame, the 50 simple. It's a perfect little test there, a lovely little bounce that you could be going for. Traders who trade with alacrity know what they're doing, and we'd be doing what I'd be doing. We'd be talking about that. They probably don't have as good a way of talking about it as what I do, because most people tend to not even know what they're doing, even the ones that are making money. But the ones that do know what they're doing are doing what I just said to do there for that reasons that I've just identified, and they'd be taking profit where I identified as well. I mean, there are reasons to look beyond that if you want to, and absolutely the next target that I would have would be 24.24. But if you're listed in this region right now, trading it for today and today alone, and that's what you're interested in, and that's what you're going for, and if that's not what you're going for, then the reason is because you think the whole thing's going to collapse and fail when we hit the 382 here at this pitchfork area, for example, and you're looking for it to collapse. But that's enough of that. We've done it now, right? If anybody wants to look at any more, then ask me something specifically. In fact, you know what? Tell you what, I would like it if you put in requests in the chat, but also if you put in requests in the chat with something specific about it, right? Because I've just given people the means of making money on the short-term time frames, and I was tempted there to go into detail about swing trades that you could do on this thing, but I don't want to. So you just tell me instead what time frame you're looking at something, and I'll try and help you specifically with the trades that you're doing right now. Or yes, everybody loves it. Everybody loves a morning mojito. So far today on the Bitcoin prices, we've come back up to test around that $60,000 area. Ooh, we're below $60,000 right now. That's obviously a round number. That's a pretty big deal. Last highs that we had were up there around about 68,000. When it pushed down the way, people will have become bearish in terms of the grander picture out there in the world. With the inflection point that's happening though with Bitcoin is actually happening right now. So anybody that's like out there looking at videos today on Bitcoin, it's going to have a whole load of shite to get through in terms of what it is that they're being told by people. They make it easy for you. Simply put, while the prices are below 58,500, so let's just call it 59,000, so we don't have to piss about in the woods too much. Then things are not great on Bitcoin. Just simple as that, right? If they go up above 50, let's call it 59,000 again. If they go up above 59,000 and stay there from say the time that it starts to make your lunch until the time that say it takes to clean up the dishes from your lunch, that sort of thing. Maybe a bit longer. Say for the time it takes you to read 45 pages of the sex novel that you're reading at the minute, then you might be looking for something decent, but otherwise not so much, right? There you have it. That's all you need. That's all you need right now on this front. The market sentiment, I think, speaks for itself on this one. Now go out there into the world, enjoy the world, watch anybody's videos that are talking about Bitcoin if you want to today, and bear that simple fact in mind, right? Because everything else that they're saying is just shite around it, most likely. If it does move up towards those regions and you're looking for movements beyond it, and that's the thing that you think's missing, well, okay, $63,333 would be where people would be aiming to. There are other areas that it could go to, right? Sure. But if you're looking for it to move up towards 60,500 or so, and for it to just simply not have any movement at all, then you're ignoring the entire way that this thing moves in general, and that there's typically decent movements on this one. We're not talking like shock horror, huge shock and horror things here. Is this what it could look like on some charts to some people? Bear in mind that's a 4.2% move there, a 4.2% move. So this is what you're talking about when you talk about like average true range, right? And put this into context, right? Let's just bring up the one of the most traded bad time to bring this one up. One of the most traded forex pairs in the world. This is funny though. I'll take a look at this in a second. One of the most traded forex pairs in the world. But you can see the size of these. But you can see that there's these movements here that look similar to come and look at this thing. Even over here, when we had this extreme movement from that low all the way up to that high. Oh my God, so massive. Yeah, that's a 0.59% move. That whole thing there is a 0.59% move. So when I say to people that, over here, if it were to kind of go up towards the 60,500 area and then drop back down by $500 or whatever, is that conceivable? Well, look at this thing, and then again, just ask yourself, what is this? So it's bigger than all of those forex moves. Then you get an idea for how these things can happen. Ryan, thanks so much. METX, yeah, no problem. METX coming right now. Can you have a look see at METX? Beat down on bad earnings pre-market, trying to determine good entry. Cool, nice one. Bit of context in there. That's That's decent. That's rather nice. I must have tried making some point about this at some point in the past. I don't know when, so I can't be sure as to whether or not those things just happened on Friday. I mean, I don't know. Could have been. We've taken a beat down at open. That's right. Where does it line up with? That's nice. It's a nice effect on that Fibonacci, isn't it? I don't know. Maybe you just don't care. Oh, by the way, yeah. Look, there's a thing in the chat messages. It's a link to TradingView. Sign up this week to TradingView. Do it. Use my link. Why? Well, because it costs you nothing. In fact, you get a discount because you use my link. You get an additional discount compared to just not using it. You do, right? It costs you nothing extra, but also what it does is it helps support me directly, because a chunk of what you pay TradingView, they give to me in a commission. Now, you'd be joining up to it anyway. And if you didn't join up to it, honestly, there's something probably wrong with you, because it's 60% off and it's really good. And their prices are, while it seems really expensive for what they do, to somebody who's brand new to this whole thing as a piece of software, honestly, you're going to be spending money trading, or else what are you doing here, right? Or else, seriously, what are you doing here? What are you doing here? What's the intention? Is the intention just to become good at trading and to become a good trader and then become rich and all of that, to do all of that without experiencing any actual money happening thing? No. So because that you will be doing stuff, and I frequently say, you know, to people, I don't frequently say it actually, I never say it, but over the period of the last 2 years of doing this and the last year and a half of doing this live every day, I've said to people multiple times that the chances are that if you stick in a donation of like $10 or $20 or something like that, and I take a look at a stock and it does nothing for you, well, oh well. If it does something for you, it'll probably do you more than 10, or so that's just $25, you know. So, yeah, great, nice one. Cheers very much, Ryan. Really appreciate it. Always is, by the way, buddy. I hope you're doing really well. And it's always appreciated. It's always appreciated, Ryan. It's always appreciated, Ryan. Even when you're over on the old Twitters and whatnot, it's always appreciated. Right? Yeah, it's going to ditch this other one that I've got on here for just now, and consider where we are in relationship to this drop down that's just happened, just so we know. And we can see that that's at the 236 Fibonacci retracement point. Now, it's not, it's at the 236 Fibonacci retracement point. Oh, but is it though? But is it? But is it though? But is it? Is it though? Actually, you can see that the body of this one closed right there. Now, the gap, of course, is a bit below that, so we could come up here, fail, not take out the 236, yada yada yada. I think the 236 here speaks for itself in terms of, well, actually, I'll advocate for it. Look at all those bodies and closing down on it, and how that was a significant level. Oh wow! Right, there we go, advocated. And we could, of course, move up above. If we did, you know, we could, of course, you know, that would be a big inflection point for us. Let's just have a little comparison just to see, actually, as it happens while we're here, where that joins us. If we're on where we find that if we go on the logarithm, on the linear charts, Fibonacci retracement instead, up there. With regards to this 236, does it have the same feeling of pivoty pointness with regards to, you know, really mattering, you know, really being important, etc.? Not quite, to be honest with you. Although there is this sort of the positive case scenario of, you know, taking out this high, taking out this inflection point, puts us back into contention of where we had our last high, and you can see that in a sort of kind of unsophisticated way, that's where the 236 would be at. And of course, a lot of people's psychology will pivot around that area. But there'll be the people who are getting into it from that area upwards. Now, you know, that's really how they'll be thinking about it. So just going back to where this was on the logarithmic setting instead, because ding dong, that's important, right? So if we come up and we fill fill that area in, that's important. Where's the 5 minute, 3 minute? Oh, I didn't give it time to load up. Should have given it time to load up just to see if there was a flash on it or any of that we need to know about there now. So yeah, so anyway, on this one right here, as it stands, like first target, what's it got to be? It's got to be a refill of that gap. That's what it's got to be, is the first target. Now, could we see continuation towards the downside? That's the scare factor for us. I wouldn't be Rocky or Crop Show, but didn't try and move the charts at least once and ended up drawing on it by mistake. Oh cool, look, we've got that flash up there as well. We've still got that target on. Brilliant. Oh, that's cool. Excellent. So theoretically, you could have got into this one then down. It would have been a good trade to have stayed in for the 333% rise towards the top side and aim for that dollar. I still do think that's where it's going. There was something happening in between with regards to whether or not we would go there, you know, 100% directly in the one move. Can't quite put a finger on it. From this point here, though, we could go. That was not to you, by the way, Ryan. I think you know that. That's to the general zeitgeist. By the way, people, right? I sometimes get people talking to me as if the things that I say to somebody, as if it's directly, is talking to them directly, and it's not. That's insulting to me when somebody says that. By the way, because I think Ryan's great, and in no way was my clear and obvious joke in there about a move up past 100% past the point at which we talked about getting into it. You know, it's moved 100% more than actually, you know. and if you hadn't taken any profit, me saying that that's greedy is obviously just fun, right? And it's educational, it's not insulting, it's nice, and it's educational, right? But there's a tiny chance that after this I'll get a message from somebody that says something along the lines of, you should maybe think about how you were speaking to Ryan earlier on, you know. Now there are times when I'm a dick, right? And I trust certain people in the world to tell me that. I certainly do. But just be wary. Oh, right. So the gap happens to exist right inside the 618 golden pocket, between the sort of the low and the recent high that we've had. This recent high that we've had was filling in this gap. You know, we came up, we filled in the gap. We probably would have spoken about that during the time of talking about this flash thing. I presume that we talked about the flash as well. I mean, if we didn't, then it's crazy that I've got this lining up so nicely with the drawings I had. So yeah, big drop down. Yes, buddy, big drop down pre-market. It's that liquidity hunt thing. Oh, I've got something to talk about on that front. Ah, excellent. An itch to scratch. A scratch to itch. Right, great. Okay, so look, we've dropped down. It's been painful. This is the chat we've had. We know that from the high, from the recent high that we had down to where we are now, that to continue on with that trend towards the top side, to actually go in for that $1. And again, that's another 330% up the way. Do I need to put on the you are really fucking greedy sign again when I do that? Do I need to put it back on again so that people would know that going for that would be, on the one hand, completely technically possible and everything else, and a target and where we're aiming to, and on the other hand, you know, greedy? But that's where I am aiming to, for sure, definitely. But just so you know. And then and right, so anyway, so that would be that one, and we've moved up and we're putting you know, we pushed right down the way, thanks presumably thanks to pre-market pricing that created at first, you know, at least this the gap that's on here. Well, we actually don't know, you know, created that gap that's on there, and it's and actually, you know, pushed a little bit further, and then and up to 39. And now we're here, we're consolidating just above the 236. When I say the 236, I mean the 236, which matters in terms of this bull flag. The other 236 we were looking at before doesn't matter in terms of this bull flag. So you can see how obviously combining, not only is it a case of looking across time frames and whatever else, but we're looking at the real pivots in the markets. Now, I've not changed the time frame from the 2 points when I was analyzing this. I could have gone up to the 1 hour, the 2 hour, the 3 hour, the 4 hour, whatever, and drawn the same first Fibonacci and said, look, we're close, but we've no cigar yet. There's a gap, right? And then I could say, but I'm trying to talk about this here in this level of detail, and saying that this is good, this bull flag. Yes, it sucks that we've pulled back down to here, but this is good. Now, what's the problem with this in so many ways is that all of this is happening. All of it's happening down here in this shithole that's been the prices where they were pushed down to as a result of the pre-market lack of liquidity. So what's been a theme of the latter part of this year? Not of the last year, right? Not really, but what's been a theme in the last 3 months, and what's been a theme in terms of meme stocks this year? Okay, what's been a theme? Meme stocks massively manipulated pre-market pricing, results in crowds of people out there in the world saying, oh, this thing's pumping, it's ripping, it's roaring, it's fantastic, and everything else, and getting excited. I'm pushing off the back of pre-market moves, like we've seen here today in GME, and like we just saw there on whatever that METX thing is. Now, that's been a theme of 2021, except it's not just on GME over here. It's on METX. It's like one of the themes of the year. Now, is this going to be a theme? Well, I have to admit that I've looked at stocks and that much more this year than I had done in the previous year. So for me to say that I would know really, really intimately if US markets had been moving massive amounts pre-market, blah, 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 would be a bit much. I can't say that, but I can say that that's part of the discussion that I have with some people out there who I talk to about trading at times, and that was something that I was talking about with somebody. So has this been the year? Has this been a year where we've seen pre-market manipulation and price and liquidity? Now it's either manipulation or it's just interest and liquidity and that happening, and looking for that there's a certain degree of preciousness about the strength of trends, that in a world where you could a little bit kind of frothy, a little bit kind of needing to extract capital, wanting to make things happen, and they're pushing that themselves. What if over here in the SPY today, doing a really good, really well. Again, you can see the current time is 3:26 my time, so I will be tuning out very soon. Banana Fridge with a kind reminder. I'm going to have to give you a wee quick message by the Banana Fridge. We are now in GMT. Thanks so much for these, but BST is gone. It's gone. We're in GMT again. Back to the classic GMTs, which happens to be universal time as well. Yeah, great stuff today here in the SPY. Wow, super fantastic. So we're going to see this across markets. Is this pushing all the markets up? Apple pushing on as well. So this is the danger. I was talking to Merrick Sanders about this last week. If you were to look to try and get out of Apple, right here, it could have pulled away. There's the danger then, of course, that it would come outside of this zone. It would aim towards the 1618. Merrick, I'm sorry, buddy, that not to bring up your name personally, and this is millions and millions of people. I mean, let's look at the volume and that, millions and millions and millions of people, and this is millions of shares of this thing, and that this is traded by so many people. It's not just yourself, obviously. So a lot of people have been thinking that. So, but here's one person here that's a good example of that. We've just come into this 1618, and this was kind of the thing. It's like, how's it going? So, this has moved up a bit. It's great. It's moved up 3.92% over here in GME. It's moved up today 10%. Is that right? Is that actually fair? Is that math correct? That's the 4 hours. Sorry, I'm wrong there. The 4 hours. This has moved up 7.5%. But you see, you're talking about two stocks that were both had the potential to move up a bit. Now I wanted this to drop down. Still feel like it totally can drop down to cut to 171.50. I feel like it still can. I wanted it to, for the likes of yourself, not for me. I bought it at 170. It was live on Jamie's stream when it happened. The time not to be, but it was Jamie's stream, and I was around with him, and it was $170, and I was buying it there. For example, and I don't personally would rather see it just go up, right? But for everybody else out there, and also because of the things, and I was happy enough to see it go to 170. I wasn't going to be crying too much into my cornflakes about it. Anyway, it's not happened yet, and instead what we're looking at is this rise up the way, which is ultimately going to come in and most likely is being a bearishly divergent high against this 250 high that we had last week, unless counterintuitively, as I ad-lib this show and talk about stuff in live real time with my live opinions, but with the information that I'd already worked out for myself last week. Now, does that mean that you immediately stick it into GME? And they're both at that point where they're fairly risky plays, and they're both at that point where they're fairly risky plays. Now you could, and if there's momentum to be had with one or the other, then you might be better off with GME at this point. In terms of percentage moves beyond this area, etc. I mean, could a massive speculative run just happen on Apple right now? It could do. Could it also ditch back down towards 149? It also could. And then could, if this happened here, ditch back down at 149, how would it look in terms of this movement here? Well, it would look like we'd come back in to retest the wedge or whatever. It'd also look like you could also like do this sort of thing and turn it into a parallel channel. I'm not going to do that in a minute. It would look like a retest of this wedge to begin with the movement down at 160, then moving into the wedge itself, of course, back into the body of it, and a retest of the 200 simple moving average here in the 1 hour time frame. And that'll be, completely normal in a world where you're not like massively distracted by the patterns on there. I mean, you don't need to be, right? So we don't need to be. but this could easily drop down. That if it did drop down past that level of 100, this thing that happens over here, when we got to consider that, you know, the majority of the value of this thing is made up with Apple. I mean, if you think about things like the Bitcoin dominance chart, right? This is a Bitcoin dominance chart. Bitcoin dominance chart. I'm gonna have a wee push on Bitcoin. Probably going to go to 63,333, have an inflection, right? We've talked about this already, but anyway, if this is a Bitcoin dominance chart, this shows you how much of the dominance of the overall total market cap of cryptocurrencies is made up by Bitcoin. So of this chart here, it shows you that the current overall, all the cryptocurrency values that are out there, which are able to be added to this kind of thing, you know, official and exist and stuff, and are traded. $2.5 trillion, $2.5 trillion, $2.5 trillion. It's a lot, right? I remember when it went over $1 trillion and stuff, celebrating. That was when Bitcoin was 20K. Now, Bitcoin makes up a massive percentage of this here. Now, what percentage of the S&P 500 does Apple represent? Not as much as 44% or any of that, right? But if you take Apple, Microsoft, it's got bigger. It accounted for, back then, it accounted for 21% of the S&P 500. Microsoft, Apple, Google, and Facebook are the big tech leaders. Apple, Microsoft, Alphabet, Amazon, and Facebook. Do you know this? Do you realize this? Can you people let me know in the chat if you knew this? It's 42%. Is that? Can people let me know if you realize this? That when you're talking about the 500 best performing companies in America, 500 best performing companies in America, that as of then, and it's probably higher now, we're talking over 20%, somewhere between a fifth and a quarter of the value of the 500 biggest countries in America exists exclusively within the market cap of 1, 2, 3, 4, 5 companies. Did you can you let me know? Did everybody know that or not? Please. I mean, is it not quite obvious now that I've pointed it out? And then you can see these dynamics and the way that they work. And then you can see in terms of stocks, like things like how if you're looking at the SPY and you're looking at that moving up the way, and you're looking over there at Apple and you're looking at it move up the way, and then you go and you look at Alphabet, Google. You see it's moved down a little bit, suppose, you know, right? And you go and you look at Microsoft. Do you know this? Did you know this? What's the Microsoft ticker again? I mean, I got them right here. MSFT, that's right. MSFT. It's, by the way, look, you'll find in the world that there's this kind of feeling like, oh, if you've been trading for years, then you should know the ticker of absolutely everything. Should you fuck? What the fuck? It's on the internet, right? People get really precious about certain things, right? Like people would be really. There's a lot of people out there in the world who think it'd be more important to learn the name of every single ticker and remember it forever and never ever forget it, no matter what, ever. Like MSFT or Apple's at AAPL as opposed to APPL, and that, oh my god, that must be so bad that you wouldn't know that. Ha 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 ha. Yeah, well, those people are stupid, right? Because it exists on the internet immediately, whereas understanding how things work is more important. Anyway, there's Microsoft doing really well. Fantastic. Well done, Microsoft, right? Apple, Microsoft, we've done Apple, we've done Microsoft, we've done Alphabet. So it's just FB and Amazon. I mean, I could wait for the charts to load up with that bit on the right. So it's down today. And then, what was the other one again? Oh, right, Fib. Not much to write home about. And then you go to SPY, and you see that's moved up. And you see that that's moved up, right? And you think Apple's bigger than these other ones as well. Anyway, just telling people. That says top chat. I didn't have on live chat this whole time. Right, totally crazy. Yes, learned it from you. Oh, cheers, Lucas. This indicator has on people. By the way, for people who are wondering if you signed up to the indicator over the weekend, and then that you haven't been added yet. Some people were who told me their names right away. Some people weren't who told me their names when I wasn't around. I asked some people who joined up, you know, within minutes of them signing up, all that. Everybody's good out there. I don't think anybody's got a problem. Just as a public service announcement that I'll be adding those once I've finished on today's show to the chart, so you'll have that on your chart if you haven't already, and a public service announcement to everybody else that if you want to join up to get access to this indicator, that you can. That there's about 90-ish slots remaining on the $100 a month level. After that, it's going up to $200 a month on it. Also, yeah, that's you know, I think, right, that's how we're doing that, unless there's some significant feedback telling me not to. Right, so anyway, yeah, down here, man, shit, right? Okay, so let's just pretend that that's not there. Let's pretend that that's not there. We'll do it an easier way. We'll go, okay, we can't pretend over there. Let's do it over here. Cool, nice one. It's gone. How is this getting on? Where are we right now? We're below that 236. So while I can understand it might be tempting to try and to add to position for more gains. Is this the right company? Did you say UEC? You did, yeah. Doing so below 445 in terms of buying into momentum is not buying into momentum. It's just averaging down your position. That's all it's doing. It's there's the negative momentum there, and you're providing liquidity for the shorters and stuff like that, but there isn't any of that from that point of view. Just from there, in terms of like from the last lows that we went down to, you're not buying a bounce off the 382. You're not thinking, oh, we pushed past the 236, we've come down to the 382, we've got a bounce off it, and I'll buy my way out of this. You know, I'll buy this and it'll go up and it'll be great. You're not thinking that. Quick reminders over here at this stage, you would have been thinking that, right? Do you see the slight difference there? Like, okay, hit off that, down past the 236, running along the 382. Okay, now it could happen for us. And in terms of this movement, it could happen for us. But to say that it is happening would be a lie. It's not, but it could. Later on, it might retroactively change what's happening now to say that was a part of it. It was a part of what was happening. But to say that it is definitely happening right now would be a lie. Let's just kind of look over here now. This is nice. I can see why you did it that in that way. And in fact, I know that you're very humble and that you probably, if I were to scroll down, are like, thanks, man, and stuff like that right now and everything else. I love you, man. Right, I think I'm going to add to me UAC position at these prices. What are your thoughts? I'm up a good amount since the end of September. And my thoughts are end of September. Yeah, man. Yeah, right. See, my thoughts are you're looking at it. You're looking at it from the end of September here. And you want to add to it, and I totally get that. But while it's below that 445 area, you could have been taking some profits at 582. You know, it bounced a little bit here at 491, but didn't quite recover the $5 area. And letting go of that position would have been hard when you're hard bullish, and you're really hard bullish for something in the meantime. Would have been. And yes, dragging this back down to these lows, you can see we're consolidated above that 236 over there. Go back to the March low. That must be March. I mean, March is so recognizable in the charts. Isn't it great? It's great, right? Because this is the way that people felt in 2010. Look at, or 2000, well, it's not the way people felt in 2010. Depends on what country you were in. It's like what people thought in the UK in 2006 and 2005 about the dot-com bubble was like that, in terms of like, look at it, there it is. And then it went to the housing crash one, and the economy took over a decade to recover. It was totally unlike the UK one. Been living in a world of austerity in the UK for about 15 years now, There's it's very different world that we live in the UK, by the way, to even Europe. I mean, Germany's had a growth economy for a long time as well. It's very bad management by the politicians over here, very bad management by the economists. Done a very, very bad job. You know, I quite like Mark Carney. By the way, the governor of the Bank of England. Not getting confused between. I mean, this is the other reason why I get confused between Scott Carney, Mark Douglas, and Mark Carney. It's that triumvirate of financial people: Scott Carney, Harmonics; Mark Carney, Canadian governor of the Bank of England; and Mark Douglas is, of course, the author of Trading in the Zone. Why am I talking about any of this? I just wanted to talk about how cool that looked, how that's so easy to see that. I'm sorry, I'm just talking noise. I'm sorry, right? That's just the ramblings of somebody who's passionate about what we do here, and is also interested in macroeconomics and stuff like that. Right. So, Corey, right, from your position right now at 423, etc., looks great to be buying here. If you're thinking that this is the rise up, that from that sort of jack, you're looking for like just a simple pattern, buddy, and that. But if it's not as clear cut as that, then of course you could be looking down for one of these lower areas. Of course, add into your position above 245 in terms of buying into strength. Add into your position below this area while it's red candles and everything else is putting you in danger, and this is catching the knife. So catching the knife in terms of this one is best represented by the Fibonacci that comes in from the 22nd of January until the most recent high, and saying that I'm looking for it to get a bounce at this particular 236. When if you look at it from the sort of the dynamics that are around about here, there's a lot of gray areas as to where the price could potentially go. So you know, while this isn't divergent, the fact that this is across the broader term is somewhat concerning. We've had a golden cross just here, not had a thorough retest of the moving average quite yet. Obviously over here you can see this doesn't really match up well with any of the levels beyond that 236. And the major danger is, if you're looking at this time frame and saying that you're going to you're relying on that bounce, is of course that you're relying on this over here completely failing in terms of the DMI having this cross, while the ADX is obviously in a position of strength, and that's fine, because that's totally fine to make that, to say that. But on the other hand, funny noises. This is really freaking. This is a bear signal, buddy. This is a bearish signal, right? This is a bearish. That's what that is. It's a bearish fucking signal, and it's a bearish fucking signal that's coming in at a point where all it takes is to go a little bit further. So that's catching a knife. What came in there? Something just happened. Somebody became a Patreon. Christopher Kunal made an order of one item. Thanks, buddy. I'll catch up with you afterwards in there. Sarah Estino, you tipped me $25. Happy Monday, Rocky. You're so kind. Sarah Estino, by the way, very, 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 very kind lady. She's funny, right? She's beautiful. She's pretty, right? She may not think so herself. I don't care what her opinion is. She's kind, she's pretty, and she's funny. Okay, so there's a lot going for that Sarah Aristino. On top of that, you're also really generous, and thanks very much. Appreciated muchly. And sorry for being so debased as to mention things, right? As if any of that ever mattered in the world ever. My dad asked me here, Dad, what did you ask me here? What do the blue dots mean? Right. So, Dad just asked me via text happens, right? It never goes to 1. And also down here, 0. The DMI never actually goes to 0, right? Whereas if you had if this was the RSI, then you'd be looking at the RSI coming all the way up towards these big numbers and down at times, not ever past 0, never actually down to 0. But the quick comparison, let me just show you the RSI over here. It can come down. It's very rare. Here we go. There's a lower point, 17 over here, very low. It's never really going to go to 0 either. Realistically, it's never really going to go to 0 either. But it can go further than the DMI. Up here towards the top end, what do you see? It's like 85, you know, sometimes, you know, and I've talked about this from time to time, wherever it was, can't remember, like, sometimes you'll see stocks at like 93 on the RSI. That is definite, you know, that's really, at that point, you need to think about taking profits. 93 in the art is, you need to think about taking profits. It's so low. And in fact, actually, you could say in a lot, the DMI is much more likely to get down closer to zero than the RSI is as it happens. If you really want a full-on nuanced discussion, which I know because you're my dad and I know you don't want that shite. But somebody out there in the world, some theoretical person that doesn't actually exist might want me to point out that nuance. Anyway, right, so just as that's just context of, in these things oscillate between levels. Okay, people talk about it in a textbook level that it goes between 0 and 100, you know, but in reality, where does it actually go between? And on the DMI, it never tends to go much beyond 60. Now, there's some key areas on the DMI, and you'll notice that the blue one in here at 40. Now, the way that I use this, and I would recommend that people do, to be honest with you, to be perfectly honest, and that is to just not use fib levels, although you can if you'd like to, if you were more interested in the 30 in these other levels, because they're a little bit nuanced, you know, and it's up to you, right? You can use them. It's 62.5 at the top and stuff. I've gone for, right? I've made up these numbers. I just made them up using math crap, and but it's just simpler to talk about it and to look at it in terms of these ones, I find. There's key areas that it goes to. And 40 is one of them, and it so often turns around. Now 40 is nice and blue there. Why? So you can see the fucking thing. Excuse my language, Dad. That's why, so you can see the thing. Otherwise, you know, it might just be it might be distracting, or it might be, you know, if it was a different color, or it might be completely ignorable if it was some other thing, you know. So it's blue, it's in there, you can see it. That's key, right? And as you can see here, so often these areas doesn't do that. It's just so often we see that it comes to these areas, and then that's where it has an inflection at. Worth mentioning. So where did this? So what's it for then, right? So you've got the red one at the top, extreme. You got the red one at the bottom, extreme. Red one at the bottom, extreme. Red one at the top, extreme. Blue one in the middle. So often. It's classic. It's classic every time. It was going to happen somewhere. It was going to happen there. That's the play it again, Sam line, right? Then you've got 50. What's that? Sometimes it turns around there. Sure, it does. Look back. Yeah, here. Look back. Nah, you could give it to that one. Look back. Yep. Here, definitely. Look back. Here, definitely. Oh, look back. Yeah, did it there as well. Except, what are we noticing? Well, these are the extremes in the markets, bringing up the price action up above. You can see this was a low. It wasn't like, you know, it came in at 50. Great, cool. It wasn't like, wow, that's extreme. Except here at the following high, which did actually push up above 60 on the DMI. I also got a flash down below on the, you know, on the rocket crop flash indicator, indicating that you might be coming back down the way. Extreme, right? Extreme high. Expecting continuation from that point comes under the category of don't be fucking greedy, man, right? That's what that comes under, the category of that. So now you understand it. Yeah, you understand it. You do. You understand it. If you say, if I come around and see you in the next few days, Dan, and you say, I listened to what you said, but I didn't understand it, I'll not be happy with you, man, because you fucking do. That 0 is extreme. That 60 is extreme. That 40 is the common turnaround point. That 40 is the bit where if you're having an argument with somebody and then you know that the person were to turn around to you and say something like, why do you always have to bring up shit from the past? You know, that's the point where it's like, okay, look, either we continue on with this, or you've had a big signal that you should really just shut up for 15 minutes and the argument will go away. You know, whatever. Like, you know, these things. That's 40. That's 40. That's where that happens at 40. Not 30. 30 is way more like 50. Whoa, does it turn around to 30? Sure it does. Here you can see. Yeah, here you can see it does. Yeah, sure it does. Yeah, here's another example. But what are you getting out of them? That's shit, right? 30, shit. 50, fairly shit. 40, so common. 60, extreme. 0, extreme. These other ones down there, same rules apply. If it's grey, cool, excellent. Bit shit. If it's red, extreme. If it's blue, how's it taking you so long to notice this till now? That's the questions. Now, what is it that made me do this? What is it that made me do this? How did I get so inspired to come up with this? How did I get so inspired to come up with this? Do you want to know the real reason? The real reason for this? The real reason? I like the guy that came up with this thing. He invented it. He's called J. Wells Wilder Jr. I like him. I think he was smart. I think he was smart, and that he didn't, and that he was so smart, and he'd gone so far beyond what anybody else had done at the time, and that nobody, even really up until now, fully respects what it is that he's done, other than me, in the world. Oh God, my skin, man. What's wrong with me? I'm like I'm obviously not doing so well at the minute. I feel all right, you know, overall, but my skin is telling me, it's telling the window to your health, right? Your immune system, your skin. It's like got to pay attention. Yeah, so nobody really respected him enough, I believe, right? Because people are using this thing, and they still think that they need to invent something else. You know, they still think they need to do something else, right? They're not getting the value of what they've already got. You know, they're just not getting the value out of it, and they think they need something bigger and better. In the same way as the person who trades off their phone all day every day thinks to themselves, I need to get a phone with a bigger screen and a faster processor, then my trading account then I'll start making money. Or the person who's like got the pro account on TradingView but thinks that they need the whatever they call the one that I've got, premium account, in order to get better at trading. Like they're the person who thinks like, oh, I need to have all these extra indicators, whatever. You know, they just haven't, they're not getting the value of what they've already got. You know, I started my YouTube channel and I just used my mobile phone camera because I wanted to start. You know, I wanted to start doing it. I could have waited until I've saved up enough money to buy a camera. I had enough money to buy a camera, but I could have just wasted the money on the camera. But instead I wanted to prove that I was able to do it. So like, you know, there's getting the value of what you've got, and then there's just being frivolous and not understanding things. So that's what people did with most of the stuff, is they were kind of took it and they looked at it and they were kind of frivolous about it, you know? There's like, it doesn't get the respect it deserves. It doesn't. Even from people who give it the respect it deserves, they're not giving it, who think they're giving it the respect it deserves, they're not really. And within that as well, J. Wells Wilder Jr., that did the work, didn't himself, I think, respect himself enough, which is probably true about myself as well, in the sense that all he really had to go on would have been the acknowledgement of his contemporaries at the time, you know, which is great and everything, except, you know, they didn't even understand what he'd done. So, you know, it's great being told well done, but when people don't even understand what it is that you've done, you know, they're you know, it's, so what? Doesn't make a difference. It's like being told that you're really good at playing the piano by somebody who's completely tone deaf. You know, like what, you know, great and everything, but that's not worth it. So that's what was going on with them, and that's what I think, right? I genuinely think that's what happened there, and it's taken until I've come along, right? I hate to be so arrogant about things, but it's taken until I've come along until anybody actually kind of understood what he was doing, right? He could have said to him, buddy paper like this here, like we've got grids in the background of this screen here, except those are kind of shitty. And what they looked like on his page was this, right? These horizontal lines. Of course, he had them going across his entire page. So he had them here as well. Sorry, just undo that. He had them at 70, had them at 80, had them at 90, had them at 100. You know, he had them as well on his lined paper, and he'd be working this out. I mean, can I get you a picture of what I can't? I'm not going to. Right. This is the type of paper that he used, okay? So I'm talking about somebody who I think was underappreciated at the time, who would have been so driven to tell people about the things that they needed to know about this thing, that the nuanced parts of his own approach would have been overlooked even by himself and his contemporaries at the time, to the point where somebody maybe needed enough distance to get between him and what happened, with them coming up with all this stuff, just to see the bits that are missing, to be able to see and have enough distance back there to see the bigger picture. And I can see it, right? I can see that he worked on that paper, and I think that everybody working on those bits of paper back in the day, especially if they're working with charts and grids and everything, would have just taken that for granted. And the guy was a mathematician, and if you did maths in school in the UK, you probably ended up in your math class as using this gridded paper. So we all take it for granted. And I was thinking, well, this thing here as a whole has been taken for granted, that's my opinion of it. And if I look at that holistically, but how much this was taken for granted, that even the things they took for granted included the things that he himself will have taken for granted about what he was doing, because he's himself, and because nobody around him would have noticed or taken it, and would have all been taken for granted anyway. So what were the things that he would have never have mentioned about what he was doing, which might have been important, which might have been to him the implicit, like, hey, look, currently, the limitations that we have for whatever, I don't know, whatever. It's just that it was everybody knew that you're working on lined paper, right? I mean, I just, like, right, you get the point. I don't know if you do get the point, but this is the point. This is the truth. I'm tuning out after this, by the way. You might have noticed. So whatever. So this is why I put those lines in, right? It seems trivial, but it's also not. And here it is, right? So here's an example of Wells Wilder's DMI. He drew this in by hand, right? Yeah, he drew this in by hand. So he had this paper, and I'm thinking he drew it by hand. Maybe that is drawn in on a computer somehow. I really don't know, but there it is. Okay, that's his one. And as you can see here, 40. He didn't have it at 60. Wells Wilder himself, even in the examples of his book, didn't know that this was necessarily extreme. But note, where does this chart end at? Where does it end at? 60. Okay. 10. Right. So here's the things that obviously people would have taken for granted, and also the implicit things which weren't said at the time, which he himself knew, but nobody ever, including himself, from the point of which he published it up until right here in this episode of this live show right now, has ever spoken about it, from the point of when this book was published until right this very second. Congratulations. That's a longer time than really, than say my oldest brother or your oldest son, Dad. Longer than he's even been alive. Nobody's even mentioned this thing ever before, but here I am talking about it now. So yeah, there it is. It says 60. There it is. It says 10. There's, like, the where does it get the most touches? 1, 2, 3, 4. The way that this thing works, so obviously there's going to be a lot of congestion in there. But 20, sure, 20, okay, and 10, and this would have been in some ways implicit to himself. What with him using gridded paper, it was maybe explicit. Sorry, I don't know if that was on screen at the time when I was trying to show you that the height that this thing only goes as high as is 60 up there. I don't know if you can necessarily see that, but does he mention the scale? Can I search inside this document? Sometimes there's the word sometimes right there. Does it show up sometimes? Not searching. Right. Does it say? I don't think he mentions explicitly that the scale only goes up as high as 60, although he does say it's an index, therefore, and how the math works, that's momentum. He doesn't say it in here, right? Just take it from me. Fuck it. I've read the book enough times. Okay, so that's why, right? That's why. I hope I hope I've explained that well enough for everybody to understand who wants to understand about this sort of stuff. Why I would do any of this sort of thing. But I mean, it's because I understand. I think that's the quickest answer. Is probably it's because I understand. Would be it. Right. So on that then, how are we doing this? Let me just see that the chat's not gone mad. Good live example of how Rocky's DMI works on BTC on the 1 minute chart. That's cool. I'll take a look at that in just a second, I suppose. Rocky Group, love your DMI. I understand why the charts, but what are the blue dot circles that appear on all three chart lines occasionally? Blue dot circles that appear on all three chart lines. I understand the charts, but what are your blue dots circles that appear occasionally? Blue dot circles. Dad, is it? Are you? Is it your eyesight? Those are horizontal. Like the blue dots. Dad, send me a picture, right? And fucking zoom right in on it and draw a circle around it, and then I'll answer you. If I answered that, I don't know if that was a good enough answer. For me, it was a good answer, but I don't know if it was good for you. Anyone else have buffering? Says Rarefied Tennis. Sorry, pal. Good live example of the thing on the 1 minute time frame. All right, BTC one. Oh shit, wrong. BTC USD. I'll just go that one. 1 minute time frame. Auto. Yeah, sure. We'll see if this. We'll see how this evolves. In the meantime, you get a lot of good examples of 1 minute. Oh, by the nature of the fact it's 1 minute, you get a lot of. If you look down at the bottom of the charts, Dad, you'll see that there's these times on the x-axis, and you'll see that these dots appear at each one of these time interval slots, and it's the same as when you click on anything on the charts here that it appears at the time interval slots. And the reason it does that is because you can set it so that you've only got a dot showing on each time interval slot, so that would be where it would be showing up, and that everything in between is just worked out by the code to make the site. These are the points that it's working out in between, where it's drawing it on the chart for you, and it's just showing you've got it selected. That's all it is. The information in the background, sure, I thought that's what Dad was asking me about. Obviously it wasn't. Pretty good though. Dad, go ahead and not remember what I was talking about there, because presumably, and I don't mind, you were probably not listening to my explanation throughout that, since I was not talking about what you're asking. Fair enough. For everybody else who's been curious as to why there are the background lines, or why it goes up to 60 and all these sorts of things about the DMI, then I hope that was enjoyable for you. Cool. Okay, off to prep my next class, says Katie. Good stuff. Thanks so much. Thanks as always. You're welcome too, Katie. You're welcome. Thanks so much for your donation earlier. Oh, you asked me to take a look at something and I didn't. You said, what did you say? I'm sorry, I would have remembered, but you know. And that's it. It was Matic. Let's go take a look at Matic. Then I'm tuning out. Oops, Matic USDT. So it has been sideways for a wee bit here, hasn't it? Just in here. Wait, sorry, it's not. I mean, it's obviously done more or less the same as what most of the other sorts of cryptocurrencies have been doing. Don't know which one I'd say this one's more similar to. It's like halfway between Cardano and Polkadot in terms of its chart recently. Is that a fair thing to say? Well, anyway, it might be a fair thing to say if I could get the balance right. There we go. It's halfway between Cardano and DOT recently. I think that's fair enough comparison. I mean, since September, it's been about halfway between them in terms of what we're talking about. So yeah, I think that comparison worked fair enough. But anyway, so on the 4 hour time frame, very significant, obviously. Jumping down to the 1 hour time frame, you can see that's both these moving averages where they are at the minute. They're in a negative stance, a bearish stance. They actually have been since the last time there was a decent flash on this chart up there at the highs that it had in the start of November, and we've been in a bearish trend ever since for the last couple of weeks. Well, could we actually get these to come in and have a cross and kiss and turn and make up and roly-poly around and then run up towards the top side? Yeah, sure, we could. And it would all happen in around about those periods. So if you're looking to trade something with a degree of momentum, with some bullish signals going along for you, then there you have it. There's something. We're going to see some bullish divergence between these two lows here on the oscillator when I bring it up, and as you can see, there absolutely is some bullish divergence between these two lows over here, and you'll find that on the others as well. So you know, we were positioned nicely, having dropped down towards this zone to find our turnaround in around about here. So great, but we're obviously struggling to breach above the 236 with any degree of follow through. Part of the reason for that, in a sense, is because of these sort of moving average things happening. Thank you so much, man. I'll take a look at, I'll read your message in just a minute. Always appreciated. There's some sort of weird white line right beside me here. I don't know what that's all about. Right, so yeah, we've had these moving averages up above, you know. So if you've been interested in Matic for a while, then maybe you've been shorting it, and maybe it's time to pull the plug on those shorts. Who knows, right? But then also, if we've been coming down here, is there potential for this to be described another way? Yeah, you could probably put a harmonic bull sort of 5-0 on here or something like that with this bullish divergence. I really, you know, personally not a massive fan of the whole 5-0 thing from harmonics, because I mean, it just looks like this type of setup, doesn't it? There's better ways of doing this. So this setup's coming into play with us taking out this area. So what is this area? What other confluence can we really find about that area? Bearing in mind that it's the easiest way to manage your risk at this point from where we are right now is going to be taking out these two lower wicks. There could be a ton of reasons for that, but you don't really need any. So from that low to that high up here, 618 being it right where that area is, that's one of those reasons, I guess. But yeah, the what else is jumping out at this thing? Right? So it was bearish conditions. This is oh, sorry. I have a phrase that I say from time to time. It is what it is until it is what it isn't. And what is that? It's a bearish trend, okay? And that's what it is until such times as it isn't. It just so happens to be that the points at which you could say that it isn't are getting very, very close to where we are now. The first stage of that is going to be taking out that area. The second stage is going to be taking out our high. Now, what our high is, why do I say high specifically? I said our high, not our higher high or any of that, just our high. And it's in here, and this is a high, and this is a low. That low was a lower low, a bearish, a bullishly divergent lower low, but a lower low nevertheless. That was a low, that was a lower low. That actually was, of course, as well, a lower low. And here, this was a high. So what we're looking for is a higher high, right? That's what we're looking for, and that's what we get. So confirmation of the good times comes in at 166, I suppose that you could say. So so yeah, but the way to get there is to get above 159, 160. We're at 156 at the minute, so you're looking at you know, a relatively small move to start the sort of the get the engine going. Okay, so so long as we don't flood the engine and end up, you know, stalling out and not being able to take out that high in there at sort of 170 or whatever, then we're doing pretty gravy on this one, and people would then look back afterwards and say, oh, that's it, that's how you buy the dip, or that's how you do it, or that's how you do it, etc. Well, you can do it now. Now the risk that you're taking on is that you obviously move down below this sort of 618 golden pocket, get continuation towards the downside, that this lower low just looks for more bullish divergence instead of just, you know, operating off the back of just one lovely, but just still one lovely thrust of it. it could easily then obviously push on down further at that point. So if you are looking for that, then you're going to want to kind of just quickly kind of establish then, for argument's sake, if nothing else, where we are versus the trend from the lows to the high up here. And yeah, right, it put you into bollocks face no man's land. Okay, bollocks face no man's land, not just your average no man's land, but bollocks face no man's land. In here, taking out that wick is one thing, but obviously, moving down below 150, nice round number, happens to be the 50% area, and then you'd be looking down for another 10 to 20% drop off in the prices down towards 137, 133. 130s there for that if we did pop down the way. So that's why you would manage your risk. High, equal, high, equal. Then you're going to say that's class B, right? So just grade down your divergences. So class A is so say there's bullish divergence you're looking for. Here's your lower lows, and meanwhile the RSI does something like that or whatever, so you're getting your higher highs. Class A, fantastic. Then you've got like a what way around do we normally talk about this? I mean, I can't remember which one comes B and then when you get C and all the rest of it, but just equal tops with equal on the RSI. You could say that was like class C divergence. It really isn't. It's neither here nor there. But see if you start pushing one of these things off and you get a little bit but not on the other, class B, class C, whatever. And then of course, class A divergence, the divergence you're actually sort of, textbook wise looking for, that's there. Why is there even a discussion point about this? Because if this is just simply, would it not be easier just be binary on it and say that is not divergent? Well, for the 2 seconds that it takes, and you could find an example like this on any freaking chart. So for the 2 seconds that it takes, let's just explore what happened in this high right here versus this previous high, and what was going on with this one. Did we get any hidden bearish divergence? Well, look, on this time frame, while this came higher, RSI was higher. Great. Okay, drop down towards the 1 hour time frame. What do we see? That high is in fact now lower. It's a lower high. What do we see here? What do we see? Well, this actually, funnily enough, is lower in terms of this. So this was like bearish divergence, classic class A bearish divergence between these 2 points just here. Class A bearish divergence and divergence. So I could continue this on and look at a different time frame again, but I'm sure you're starting to get the point here that this was hidden bearish divergence here. But in terms of the 4 hour time frame, obviously this is just bullishly convergent. So is that class A? Well, no, it's not. It's kind of shite because it's confused setup, so it gives you a confused picture. So that's how that works. And then of course, if it was class A and pure and across all the different time frames and all the different ways, well, then everybody would see it. It'd be dead easy. There'd be no need for any sort of real brain power, and that's how that works. I may well have lost my internet, right? Might has happened. That chart's not loading up, so it's time for me to do my reverse roll call if I haven't done already. I haven't done it already, no. And to say thank you so much to everybody for tuning in. I did get another message there just before the end from Space Banana. What did you say? Hey, Rocky Outcrop, been listening in and still catching up. Could we check out AVAX or a ticker bingo if you still have time? Thanks again. Well, because it's you asking specifically, mate, I'll take a look at AVAX, but otherwise, in fact, there's 2 things I'm planning on doing today. There's AVAX here, just real quick then, and then I'm going to take a quick look at AHT, and then I'm going to tune out. Good, done well. It's not retraced back down the way. We're back at 143 already. It is obviously a little bit bearishly divergent. It's all-time highs. It could easily be bearishly divergent. If we did pull back down towards this area, I would be looking for. Oh, I've got candlestick patterns showing up here for some reason. Don't know why. In fact, get rid of them. 3-6. So if we did drop down the way. If we did drop down the way, blah, blah, to come in and retest this, is extreme danger at this point to be taking that out, because we could very easily drop on further down. And in fact, we could even go all the way down as low as, we could even knock, a significant sort of 70% off the price of this thing to drop all the way down to $67 to fill in that 24-hour time frame flash that's come up there at that low. I mean, that would be horrible to see, but it's not unusual to see stuff like that happen, here's the one USDT chart over here. Let me just find where we had a flash at. This is where were those highs there. Good. Okay, so let me just see 4 hours, 3 hours, 2 hours, 1 hour. There, 1 hour time frame, right? So down here, the price 22, the prices has come all the way up as high as 37. So to get back down to 22, what you needed to do was a 41% drop in price, you know. And while I didn't want it to happen, right? I saw it there and I was like, oh, maybe that won't happen. Maybe it won't happen. And I mean, well, then it did, right? It did happen. So how would I be thinking about this? Well, it's not, I don't want it to happen. It's not going to happen. It's not going to happen so long as prices are above $114 as it stands right now. And then I'd also take that, I'd carry that on down the way just now, matey, and think about it from the same perspective. Here's your last low in here. Now this low is miles away from all the drawings and crap like that we've got on there. So just take this up to here and we get a much more detailed look at it. Dropping down below 140, not good. If you're trading this is 5-minute time frame. If you're trading this short term, you can see when we're doing consolidating like this, very, very good. So it depends on how sort of what sort of contact you have with the markets. As you can see here, easy trending stuff, just, you know, easy on the trending, always easy. So so you know, if you're not around to be doing that sort of thing, and you want to manage it like that, then fine. Because the thing, of course, is that managing it like this and then not thinking about the swing trade means that you're positioning yourself in a you know, you're not exposed, you wouldn't be exposed to the markets any longer if you weren't thinking about getting back in. So, you know, if you're looking for that exposure, then to the risk, because you wanted to buy that risk, etc., then fine, totally fair enough. You would need to be in the market, so you would need to be thinking, like, if this dropped down a bit, then would you buy in it at one of these lower areas? And you know, if it took out the area that you sold at again, you know, you can obviously leave 0.5%, 2%, even 10 or 20% on the table and just not care, in terms of that's what you're paying to not take on that risk, because it's always to go in and draw on after the fact, like that there now that I just did. But anyway, cool guys don't look at explosions or whatever. But obviously we came up towards the 886 just there and we didn't manage to take it out. 886 being that sort of, like, you know, the last, the depressing, nearly at the surface of the water, but you just end up drowning anyway, recovery point that can happen with these sort of recoveries. So just need to watch out for that in terms of this current bull flag that we're on. Taking that out, yeah, leads into going on for higher highs. Where are we looking for, mate? Let's just keep it rolling, right? Let's just keep doing what we were doing before. Let's keep doing what we were doing before. Let's look up to 162 next, okay? 162, completely conceivable. What is it that we want to see happen along the way? Health, man, health. Always about the health, right? This is a nice big rise up. Means it's not being bearishly divergent in the 5-minute time frame. 1 hour time frame, yeah, okay. Look, bit of the old bearish divergence, yeah, right. No, there's not. In fact, whoa, look at that. In fact, in terms of this thing, and Kate, that's very nice of you. Thank you so much, Katie. That's really kind, really very kind of you. Thank you so much. What you can see here is that, yeah, it's like the big wicks that we had there. You'll have experienced, actually, yeah, because this is where you were talking about before. Absolutely right, matey. Yeah, we're below this currently, but we could be above it. Big conflict of questioning minds here, because, you know, the 1 hour time frame showing us quite clearly, this 1 hour time frame shows us quite clearly that this big wicks on here kind of leaves you asking about where did we get to. 4 hour time frame, right, obviously higher and obviously bearishly divergent. Something like the 15-minute time frame is giving you that idea that we aren't. Look out for flashes, by the way, because flashes as ever. But what I was trying to say there is that on the 1 hour time frame, we need to push up. Counterintuitively, we fucking need to go for $160, mate, or this thing's going back to 110. Do you get the point I'm trying to make? Counterintuitively, this gap, this area that we're seeing here on the RSI, this failure at the bullish control zone would be pissing its pants, and we're going to try to test the bearish control zone at that point. in that sense, right? And the nuances across the time frames say that counterintuitively, either we have to go 160, or we're probably going 110. Nice. Glad to see us following along with the technical analysis that we did in last week. It's me here. Hello. Hi, it's me here. Bloody auto button. In fact, it's the auto button's been annoying me here, making it hard for me to show this. What if I were to take this chart here and kind of just zoom out a wee bit? Give me the zoom in function again. God, give me it. It doesn't want to let me? Okay, fine. I'll stick you on the half an hour chart then, see how you like that, pal. Right. Sorry. Right. I'm not sorry. What am I talking about? Look. This is close to... You don't... Ow. I've not looked into this yet in enough detail, and time's out in today's show. If any of you want to, you can go out there and you can try and find out what the rules are for Wycoff accumulation. This is the same as Wycoff distribution tops, but it could be a Wycoff accumulation bottom. This occurred to me not last night, but at some night in the last week or so. I was probably towards the end of last week. I was probably thinking, wait a minute, does that look like this? And it just had this image in my head of is this Wycoff accumulation? We so very infrequently get to talk about Wycoff accumulation. It's not in a way. I don't want to. Anecdotally, I would say that certainly over the last 5 years, Wycoff distribution has been much more common than Wycoff accumulation in terms of how things have gone for me in terms of thinking about things. But I don't know if that's completely and absolutely just as a result of things I happen to be trading, and that I'm looking for, and the types of lows and types of bounces that I'm looking for, the type that I'm looking for. Like when we're talking about what's going on with MATIC there, that's not like trying to do some sort of Wycoff accumulation play or any of that bollocks as well, at all. But maybe this could be one. Maybe this could be one somebody might want to look into. I can't really be bothered. I've got no time left, and besides, I don't really trade Wycoff. I mean, like, fucking hell. Wycoff is so theoretical, right? Same with Elliott Wave and everything else. Not theoretical. Not Elliott Wave's better in a sense than that, but it's not about the theory. It's what I'm trying to. There's a big difference between talking about it and doing it. Anybody who's ever done anything in their lives know damn fine there's a big difference between talking about it and doing it. I'm a doer, right? I'm a doer talker too. I'm a doer guy. Scottish pun. I'm a doer though in that sense, right? And you all are out there, right? So okay, cool. So there's talking about it and there's doing it. Caitlin, thank you. Take care of yourself. Thank you. You take care of yourself too. Space banana. I hope that was a help to you, matey. I mean, if it wasn't for the indicator, then great. I'll set you up with that as well. Ryan Seeley, thanks for the 1999 super chat. We did take a look at METX earlier on. Sarah Steino, thank you so much for the $25. Happy Monday, Rocky. Thank you so much. Baking Pancakes sent a $5 super chat through that super chat. Thanks for continuing to inspire us. I'd appreciate a look at STKL. 4 hour has up down flashes. Have a great week. Can't believe I missed out on that. STKL, sorry about that. You've probably been chatting about it in the thingy as well at times, and I've been ranting on about other stuff. Oh great, 754, excellent. Straight away a target. A bit of a bottominess there, a bit of the old bullish divergence between these lows. Yes, it's conflicting on different time frames. Look at that on the half hour. We did get a low and a push up there. Just going to have a weak look over here in the 4 hour time frame and confirm that this is not a lower low. And on the 1 hour time frame, what did we get here? No, we also got 3 higher lows. That's not bullishly divergent in any of these time frames. Obviously, if I drop down towards the half hour, the 15-minute or something, do I get one where we actually saw it close low? No, we didn't. So it's not got bullish divergence on there. Whatever, who cares? It's not like you need it. It's not like it's a protocol that needs to be followed. But towards the top side is my aim. 754, it's visible on all sorts of time frames. It just keeps asking for it to be there. 754 is a clear goal for the chart. 754 is what? It is the test of the gap, but not the gap fill itself. So there you go. Interesting one. You don't even have any conflict of interest there. Just simply trading to the gap and not actually trading for the gap fill. Brilliant, beautiful example of it. What is this thing? Well, this is a downtrend, a bear trend, a bear market, a bear trend, a bear market. Is it a bear market? Well, if you've been in a downward trend since, say, let's just call it, say, February, and you're currently in, well, let's just call it November, then yeah, that would be a bear market, and it's been trending towards the downside the entire time. So have we got anything? Have we got a Wycoff bottom? Have we got a massively bullishly divergent bottom, etc.? Not really, although you can make the sort of the debate here, jumping up towards the 24-hour time frame and saying to people, look out for those daily closes. Well, we've had periods throughout the day of it being okay. What we've seen actually is that it got bought up during that day. It got bought up during that day. Well, what's happened so far is it hasn't been bought up during the day today so far today, and then now then we get our first dose of bullish divergence. Can we actually push back up the way, get some sort of unflattering move towards the top side failure, and actually going for lower lows thereafter? Could we do that? Yeah. Is there a probability of it? Yeah. What would that be at? About 754 would be where you'd be looking for that, pal. And then you'd be asking, can we push on down any further? So if that's been a bearish trend and all the rest of it, the complete lackluster move, inability to get into the bullish control zone and back into the bearish control zone ever again since, has been spelling out to you as clear as day, as CLEARDAY, as clear as day, spelling it right out for you there. But now we could see things pulling down. Now, if we do start to see things pulling back down the way, where are they going to end up going in the mean? Structural support, yes, okay, at this knot here, we've got something over to the left. Yep, okay, a lot of support and resistance in here. Okay, a lot of it. Oh, in fact, we've even got flash in the past over there as well. So, yeah, good. We were kind of always coming to this point. So, yes, from this point onwards, we could see, absolutely could see the things start to turn around and go towards the top side. Now we can't. Up till here, not so much, not so likely, and that's where we are with it. So if we were to actually measure how far we've come, this is an interesting one, by the way, as well, because when you look back, you can see, again, this is March, you can see it. What's the highlight to us, though? It's that massive wick there. It's green, and whatever that candle is there, that green candle is what lets us know it was March. This one, interestingly enough, was shite before March, just, you know, as a spike comparison point to people. This is March over here. That's October 2020, sorry. Come on, load up March. Come on. Right, so plenty of stuff to be doing on your own over there. If that works for you anyway, you can make comparisons between things. You could try and figure out what it was, the point that I was going to try and go on and make. There you have it. There's the SPY there. It wasn't quite as low as it was in March. March did push lower. This one kind of a little bit curious as to you know, why it performed so badly in the run up to then it performing so badly again, that actually when it happened next time around, it didn't do quite as bad as it had done before. I mean, why were all of its earnings shit for its entire lifetime right up until this point? You know, what really is going on? Do you know anything about this company, Super Octa? I mean, I don't know anything about them and all that. Anyway, where we are now is it the sort of thing where you're like, really, I can't wait for this turn. It's so totally definitely about to blast off right now because there's 1,000 things saying it's going to. No, it's not. Could it? Yes. Could it do it and then retrace down the way and go for lower lows? Yes. Is that more likely than an overall reversal in the markets from right here? Yes. Could it do the overall reversal in the markets from here? Yes, it could. Could it have done it up till this point? Highly unlikely. Are we looking to get a lower body close today, perhaps, compared to our previous days? Yes. Can that lead to follow through? Well, the weather report for any given day is based at least 2/3 on the value of the weather report from the day before. So, yeah. But are we looking for that to try and happen? We actually are looking for this to try and turn around. How is that expressed? In lots of ways. Well, if we actually are looking at this and saying that we do end up closing down lower, if that actually ends, the cherry might get in at like 7 and then go up to 854, or it might reverse from there. 854 though. That's curious. How do we see it? We don't see anything else though. And this is where's 854? Some Spanish lassies outside singing. Yeah, okay, sound whatever. If it goes up towards that one, then maybe things have changed their dynamics slightly. I'd be looking, if it went up towards that, I'd have to acknowledge that your true range would be bigger, your volatility would be bigger, that your movements would be bigger in the markets if it goes for that one before it has this pullback down the way. Think about it. You know, if it has big moves up the way before it has pullbacks down the way, these pullbacks happen for a reason. It's all to do with like true range, elasticity, it's economics, supply and demand, and all that stuff. So if it were to go up towards that area, it's pushing it on just that little bit more. So things get a bit mental. The 236 on this one is at 941. So in terms of actually turning this thing around, we need to have the result in, you know, we need to get something out of it that can get us towards that, because there isn't anything so obvious that's going to take us there from what I've looked at so far on this thing. But let's be honest, I'm really dying to tune out. So yeah, thanks so much for everybody for tuning in today. Really do appreciate it. Caitlin, Space Banana, Christopher Kunal, Ryan Seeley, Sarah Estino, Bacon Pancakes. Thanks so much, by the way. Feisty Goats, Kind Bee, and Caitlin again. Thank you for your support today. It's massively, massively appreciated. It truly, wonderfully, absolutely, actually is. Come back and tell me about trades that you've done recently and how well they've gone. The TA, please come back as well and tell me about TA that didn't work for you. As far as I can tell, I just keep on giving out amazing information all the time, but let me know what it is that you don't understand. Let me know what it is that's not working for you, because I'd like to know. And also, let's face it, I've gone on a muscle memory lasts way longer. This week, I think that what I'll do for the week is I think I'll probably just have to do the whole sitting here in silence. I'll use my phone so I don't get bored, right? So like, you've seen people do this on YouTube all the time. I'll use my phone. What people do is they just play like mobile games and stuff like that. I'll also trade off my phone and stuff like that or whatever if I want to. I probably won't, because I find that unethical, but you know, I might. And then I'll ignore yous like the other YouTubers do, with the greatest of respect, right? Because I'm sick and tired, and I've been working too hard, and my skin's telling me that I need to take care of my health. And today was actually a really educational day again today. I know that it comes across with this sort of like this type of chat here at the end. Hand is. That's better. Is it though? This is not good, by the way, people. If you think that I'm happy about this, you're fucking wrong. Chat. So, Merrick Sanders, Robert the Bruce, Jamie, Liam Neeson, cool though. Ooh, like people coming to Mother Mary and saying, please have another baby Jesus. Mother Mary. Yeah. Well, they should have married her first, right? If they were good Catholics at all, they would have married her first, wouldn't they? So Ms. A, oh, you're here as well today, Ms. A. Lovely to see you. Finally getting my TV via Rocky's link. I hope you're all very well, lovelies. Yes, please, everybody do use my link. Why? It helps support the channel. It's a good thing to do. It supports me. I use TradingView every day. I basically am a TradingView partner, like, so that's cool. I obviously think that they're really good, and I think it's well worth it. But then again, this is how I make my living. If you think that this is really good because you do this as opposed to watching episodes of The Simpsons and you're really just waiting for your pizza to come out of the oven, then I don't know, it's probably not for you. Apple Blossom, Ms. A, nice. Hope you're having the best day. Yes, same here. Verved, good to see you, Verved, mate. KT, it's always good to see you. Dad, thanks for tuning in. TradingView, refer a friend, and you'll both get up to 30. Dad, shut the fuck up, Dad. Don't delete that message. What the hell, Dad? Why are you so stupid? No, Dad, look, I have a TradingView affiliate link. I want everybody here to use mine. Don't do that shite where you refer a friend, right? Because you refer a friend, you'll get $30, they'll get $30. Great, fucking brilliant for that $500, $600 package that you're buying or whatever it happens to be. That's great and everything. Do it through me though. You'll get the $30 and all the rest of it, and I'll get the affiliate thing, and it'll be great, and it'll help support the channel and that. So actually, I tell you what, if I see any of you sharing TradingView links with each other or sharing them in the Discord or whatever, I'm just going to chuck you out the Discord, right? It's not worth having you in there, honestly. The affiliate deal with TradingView is quite good, so don't listen to my dad. That was the wrong thing to say. And if I see anybody else saying it, I'm just going to ban you, right? Just going to ban you. I don't give a shit if you're a member of the Patreon or anything else, because don't fuck with me like that, right? This is something which would otherwise be, just don't fuck with me like that, right? Okay, cool, nice one. Right, so yeah, well, that'll do for the reverse roll call. Actually, look, I really, that'll do. Oh, there, Stephen, Amber, Piga, Trace Button, Rarefied Tennis, Apple Blossom, Observe Thyself, all the rest of it. Love yous very much. Love yous very, 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 very much. Don't refer each other to TradingView. That'd be bad. Instead, use my TradingView affiliate link. That would be good. And join up by Black Friday, right? Because if you're not using TradingView and you're using something like Webull to do your trading, honestly, stop pissing about.